Yeah, so friends, today we have a great honor to have our webinar, as we always do every Friday. And I want to take this chance to welcome us on board. And I want to take this moment. I'm David Ogoin. I want to take this moment to welcome our speaker. He is already with us so that he can set us off even as we begin. Tonight, our speaker is CPA Eric Okoth. Eric Okoth is a business consultant and a practitioner in tax and accounting. He's currently the managing partner of Eklov Consultants and the director of JTech Enterprises Limited, which is an electrical construction firm. He is not just a mere director, but he has a span of an experience of over 10 years. And I believe tonight, combining the knowledge of electrical construction firm together with the business consultancy and the tax accounting, I believe it's going to be an interesting show. So brothers and sisters, thumbs up as we welcome our speaker to pick it up from there. Welcome so much, Eric Okoth. If you're ready, you can thumbs up as we welcome Eric Okoth. Karibu sana.
Thank you so much for that introduction. I want to believe I'm audible.
Yes, you are.
Okay, thank you. I want to take us through this topic, financial management for startups and SMEs in Kenya. Is one of the widest areas to discuss, but I will take the shortest time possible to touch on a few areas because we can't exhaust everything within this short session. However, I believe at the end of the session we'll be able to have made some strides in terms of knowledge governing tax, accounting, and management, financial management as a whole in needs and startups. Financial management is one of the backbones of every sector or every business in this country and beyond. Most people maybe have overlooked that aspect, but is one of the most important aspects in managing the success of a business. So from the topic itself, you'll see it is a financial management for startups and SMEs, efficient, sustainable financial decisions. Most for the period I've been in practice, over 10 years, interacting with different businesses, different kind of business, ranging from law firm to hotel industry, to the foreign companies, the local companies, both partnership and limited and sole proprietorship. One thing stands out that you need proper management of your finances for you to succeed. So as we handle these, I can request you to take note. Objectives of this session would be understand your budget and forecast, learning pricing frameworks, improving cash flow and profitability. Now, In every organization, you have different kinds of financial reports you need to have, or you need to have knowledge of. You need, at the end of the day, you need to know the position of your finance in terms of liquidity. Liquidity is where now will come with cash flow. The profitability will come with the management report, whether you know whether you are able to make a profit out of this business or you are not. Liquidity means you are able to have enough cash for operations. You can have a business where you have all the money stuck somewhere in terms of the assets and the stuff, but when you need that money today, you cannot get it. So for these small businesses, the small and medium-sized businesses, to succeed, never overlook the issue of liquidity because it's very important. We call it working capital. Now, working capital is simply the difference between current assets and current liabilities. When you are able to make the repayments or payments of your creditors, you are able to remain with something. When you remain with something, you're able to run other operations of the business. Budget is a historical tool. It is simply a financial plan that speaks of your future by simply getting data from the past. You can do a financial budget from the historical information you have. Now, when you are making losses for the last 2 years, 3 years, for you to say that you're going to make profit in the next 3 years, you must have had a few things explaining that. Now, that's where we come into your budget. That I'm going to make profit after 2 years because this and this and this is likely to change. So in the business itself, you need budget to know where you are coming from, where you are, and simply where you need to be. In budgeting, we have a situation where you start a business today, you simply don't know what you need in terms of finances, in terms of resources. Do you need an office? What kind of employees you need to have? What kind of products you need to sell in that particular place? What nature of profit you're likely to make? What nature of compliance levels you need to adhere to? When you start a business, you need to understand that this business, I need 100,000. With this 100,000, I should be able to, out of this, I'll be able to pay rent, this amount of money. I should be able to pay the employees this amount of money. I need one or I need two. Secondly, do I need marketing? If I need to budget for that. Do I need anything to do with the certificates or licenses? I need to do that. Now, the reason for planning all this is to avoid what we will refer to the messes as a result of not planning. You go somewhere, you do your business, you spend 100,000, you don't have money, then you realize that you can't open this business without county council or county government license. So for the budgeting purposes, you should be able to understand that this business, before I do it, I need to factor in all these things. This nature of business, what kind of license, what amount of license will it attract? Like in Nairobi County, we have different classes of license depending on the nature of business you do, the number of employees you have, and the office square feet. They normally do, those are the few considerations they have. So before you open whatever nature of business you want to have, you need to have factor these things in advance. Secondly, on the issue of forecasting, Forecasting simply speaks much of the future. It doesn't speak much of the past, but it speaks much of the future of what is likely to happen. So you can forecast that I'm going to make this money, but in forecast, there's a lot of adjustments. There's the difference between forecast and budgeting. Budgeting is a standard financial planning tool, but forecast is a predictive tool of what is likely to happen. So in case there is change, you definitely have to readjust your that forecasting to whatever budget you've done. You have to readjust it. But for budgeting is a concrete. You can budget with it for the next 2 through 3 years, whatever. So it does not need to be adjusted. Though for the SMEs, we advise, because there are also different types of budgets. The rolling budget is the best. The rolling by financial budgeting is the best for the SMEs because of the different changes that happens with SMEs. Most of SMEs are solely owned by the individual, one person or two, or simply one or three. But whoever runs it or whoever makes the decision is just one person. So we advise that for the budgeting, you need to spend the most. Do research before starting a business. Then after that, you do budget, knowing what you have. This one helps even beyond business. It will help you individually. You can simply speak about that. In terms of pricing, how you want to price yourself. Pricing, we have different models of pricing. Let me touch on four. Let me touch on 4 types of pricing. We have cost plus pricing. This is simply a cost plus margin, cost plus your profit. Then you'll be able to arrive at the pricing. You're saying that I need a profit of 2 shillings in every product. This product I bought at 10 bob, maybe add 2 shillings, then you arrive at 12 bob. Then you charge your pricing at 12 shillings. Then we have market penetration price. This is when you are new in the market. People are there already exist in the market. You can't give the same price to them. You are likely not to. So you have to have a special market entry price so that once you establish it there, you'll be able to pick it from there. So let's say there's a standard price in the market of 20 shillings. You say that I want to get in the maize market, but let me come with 18 shillings. I think most people must have experienced this. When supermarkets open, when they open a new branch somewhere in your area, this is a branch which has already been. Naivas is opening a branch in your area, but there's other supermarkets in the same area. Whenever they want to open a new branch, they normally talk about promotion, or they have some special offers. Now, those are market entry prices, so that they will get a catch or a few customers with that prices. Once they establish a base, then they standardize their price. So that's the market entry price. The promotions are the stuff. Then we have the dynamic kind of pricing. Dynamic, it is simply to see whether if I reduce this or I make this profit this amount, I can make this profit. Now, dynamic is somehow, it speaks much with that it is more or less with promotion, with market penetration price, only that it is a short term. It is depending, it can be high or low, depending on whatever you want to achieve. Let me make this profit 25 for the next 1 week. I see what I can be able to gather. Once I do that, I know I'll get some customer to buy the same rate. Then I go back. Aya. Then the another type I think I've talked about too. Then the third type is value-based. Is a value-based pricing model. Value-based is simply you know what you are offering. A good, and you know that specific customers who are looking for that your product because because of its value. Good things in the market, we have different brands of TV. Let me talk about television sets. But you realize that some companies or some brands like Samsung, LG, Sony, they have decided that some other companies are selling their TV sets at 20 for 32 inches. And then they can sell it at 32 or 30. And they will still sell. So it depends on the value of what you're offering. Of course, taking note of the market you're selling. Then, I think I've talked about the four. Yes, we have dynamic cost plus, we have market penetration pricing, and we have value-based. Now, I've talked about budgeting as a financial planning tool. Draws data from the history. It draws information from the historical data to plan for the future. While forecast is forecast is simply states up what expectations you need to have in the future. So that's why I'm saying it is adjustable frequently. You expect this thing by Friday. If it reaches Thursday when you are not able to achieve it, you adjust it and see whether you can revise it downwards. Key messages. Cash is the king. I've talked about that briefly when I was talking about liquidity. Cash is the king because for you to run a business like SMEs and startups, you need cash more than credit. You need to understand that. You need cash more than credit. That's why you don't need start a business today and start giving people credits. You will close tomorrow. You will close tomorrow. In fact, cash, you need cash to operate, but if it is possible, you need some credit in terms of you get your finance or you get some credit from suppliers to operate so that your cash is being directed to other important aspects of the business. So cash is the king. Profit is okay. You need a profit, but profit, at the end of the day, the profit would be for the forecast, is not for today. After some period is when you will see the profit to see whether I'm growing or I'm not growing. But today you need cash to stay afloat, to stay alive. So whatever you are doing, ensure you maintain cash. Now, a simple scenario I want to give on this. I've worked with different sectors. So there's one construction sector I was working with. And now as accountant, naturally, we need to plan whenever we are in new organization. We need to plan. We need to plan everything about your finance. We couldn't tell after 1 year or 2 years what are you supposed to do. Now, in 2018, after I'd worked here for some years, I saw something. Then I told the director, of course, is the boss, but I will tell him. I told him that from the look of things, I see a possibility of the way you are doing things. We need to look for people who can give us credit. Because yes, we had people giving us credit, but he was reluctant to pay them until he was not able to get credit. I told him that you are spending cash to buy materials because this is a construction sector. This it is demanding in terms of cash. You might not be able to run this business for long. So I don't see a way we will succeed with this cash. Why don't you look for at least 2 or 3 suppliers who can give you credit? You operate in cash so that cash can only deal with the daily running of operations. Because here we are in a construction sector, you are financing a project of 10 million, 20 million, and you want to use cash, you will not be able to do it. You run out of cash. When you run out of cash, that will be the end of that project. And other things will suffer. Yes, he understood, but he said, we will see. Because at the end of the day, I don't have a lot, I don't have the final say. So, unfortunately, after some 3 years, whatever he said came to pass because he was not able to even pay salaries because the cash is financing projects. He was not able even to finance some projects because there is no now cash. So you need cash to run the business, but equally you need credit to get things in credit so that you are able to run the most important aspect of the business with cash. Simple metrics beats complexity. Simple metrics beat complexity. Measure and understand and watch how your operation or your business works, what you need to do in a week's time, a month's time, in 2 days, so that it doesn't get you off guard. So just simply plan for them. I need to pay tax VAT by 20th. Plan for that as soon as first day starts, so that you don't wait on 18th, you don't have cash, you need to pay VAT, you are not able to get that money, you fail to pay VAT, you get interest, or you get penalty from KRA, then that penalty and interest eats into your money, something which would have been used to spend to buy something else. You fail to understand that this business, I have an hotel industry. In this hotel industry, I need the tourism licensing, what we call catering levy. I need to pay it. You don't pay it, you don't register. One day they come in, they tell you that you are supposed to pay this, then you are slapped with the penalty of 100,000. So simply know what you're supposed to do and plan accordingly. Pricing determines survival. Very important. As I had said there before, that different kinds of pricing, but understanding the nature of the market you're operating from. Do not underprice. You will run out of the business. Do not underprice. Don't underprice. Know what you're supposed to do, what you're able to spend on. Don't underprice so that you're able to attract customers. You will close tomorrow. But price taking into account what you're supposed to spend on is important. If you are not, that's why if you're not able to support your operations, you cut down on expenses. You reduce the employees, you reduce the rent, you move from an expensive place to a lower place, so that your price, you don't need to increase the price to meet your daily costs. So pricing determines business survival. Do not underprice, do not overprice. Plan, measure, and adjust. Plan, measure, and adjust. Budgeting, I've just talked about rolling budgets where you are able to adjust. Preferably use rolling budgets in this time so that you're able to plan, see whether you need to make small adjustments for you as SMEs or startups to survive. Plan, plan, plan. It's important to plan. Control basics. Control basics. One of the simple thing that we need to control. Control when you need to invoice, when you need to get your money. You can't start a business today. That's what I say. You can't start a business today and you give credits because there are some important expenses that you need to make at the end of the month. So know when you need to invoice, know when you need to get those collections, know when you need to cut costs. Profit versus cash flow. I think I'm touching almost the same things at the same time. So I think I've touched on profits and cash flow. I've touched on working capital, how it affects liquidity. Uh, I've I've touched on timing differences drive cash issues. I think I've also touched on that. Budget structure. Let me talk about budget structure in that. The others I've touched on already. Budget structure, revenue, cost of goods, gross margin, operating expenses, taxes, and financing. One, you need to understand the nature of business. In the government laws, limited companies are taxed. Local limited companies are taxed at 30% net income. Individually are being taxed on we call it on I'll get the term. It's not a fixed rate, but it's being taxed like a payee, like pay one. I'll get to the actual term. So when you start a business, you need to understand that that business is being taxed. So as you plan also and factor in tax. Of course, at the end of the day, but when you are starting a business today, you want to have employees, you want to have everything in place. That's why I normally advise. Since I register business equally to help people, personally, I've started businesses, not one, with clients. I register your business, I help you set it up, I help you run until I remain as a consulting party. Now, I will not advise you today to start a business and put all the obligations today that I've registered a business today, get me the KRA PIN for my company, put for me the VAT, pay as you earn, all these things. Unfortunately, I don't do that because I'm in both fields. I will tell you that it's okay, start it, but you don't know what tomorrow holds for this company. If you put all these things today, you will close tomorrow. That's what I normally tell them. Start with one obligation. If it's a limited company, start with income tax company. Then, if you start operation and you see how things are going, we'll add VAT. If you're dealing with vatable items, then we'll add payee. Because when I do payee and I do VAT to you those are monthly obligations. If you fail, because maybe at that particular time you are not able to have a resident accountant, and you forget to file payee, you will penalize 10,000. Your profit for the month is not even 10,000. Already you have 10,000 penalty. You fail to file VAT is another 10,000. Your profit for the month is not even 10,000. You will close tomorrow. So I normally advise until you are stable and you're able to handle all these things, we will add them. So in the terms of planning and budgeting, understand that how you are supposed to do these things. Revenue is simply sales, what you're supposed to make. Do you need to understand more of the market? Do you need more proportional services? Do you need to expand your market to get more sales? Because in business, you can increase sales or you can reduce income, or you can reduce costs. You can increase sales or you can reduce cost to arrive at the same thing, same profit. So financing, you need to know whether you need financing. Financing might attract interest. If you don't need financing, don't go with it. If you need it, look for a soft loan where you not pay interest if the business cannot make it. One thing that I need to bring to attention and maybe quickly touch on, I've seen a challenge in most businesses. This small business we're talking about, the SMEs, where one person is the director and he thinks that the business is also part of his properties. He takes the money of the business, he goes and buy food at home, pays rent, and think the business is doing well. No, you'll never know whether that business is picking or not picking. Have separate account. Open a company, open a business, go and open account, bank account. Make sales, let all the operations of the business be separate, distinct from you. Learn to earn salary of 10,000 for a business and increase it as the business grows. But don't go to business account, take all the money, spend. When the business needs the money, you don't have the money. You say that, okay, let me now go and borrow. When you borrow, you say that I've borrowed for the business. This is my money, I'll take it back. But this is not your money. You first took the business money, you spend it to other things, then you look for the money. So you are just simply funding the business. So for the business to grow, make it independent from you. Detect shortfalls early. Detect shortfalls early, please. Several businesses suffer simply because they don't understand that there's a problem in the future. And this is simply because you are overlooking. If you have a good accountant, they will tell you that there's a problem somewhere I'm seeing from the whatever we are happening in this business, we need to change, or we need to make some adjustments, or we need to do this. Our business, I've seen clients who you simply tell them that there's a problem you need to adjust in the future, they don't. And when they hit the wall, a good example was our business, which I've seen. You told them that way for the look of things, I'm seeing you are in arrears for 2 months. This is rent you're paying 100,000. But from the look of things, your sales can barely pay this. Why don't you do this? Why don't you look for money, some financing somewhere, clear the arrears, and move out to a smaller place? I should strategize. No, the person says, okay, no, but I've been here for the last 3 years, 4 years. This thing will peak. This is where I used to make sales in the last 2 years or 1 year. So itarudi tu, itakuwa sawa. Now, after 1 year, this guy owes not 200 now, but owes 1.4. Now, when you owe 1.4, where will you get the money? You can't move out, you can't make sales. What happens? Simply, you are now closing simply because you cannot detect your shortfalls early. It's important to do that. You need an accountant. It's simple. All these things, you need an accounting knowledge in your business. You don't need to employ an accountant in your business, but you need accounting knowledge in your business. If you're not able to employ one, you need the accounting knowledge. In other words, you can outsource that knowledge. That, okay, I don't know this, but can you advise? How do I do it? That's why I normally tell some clients when, because I do bookkeeping for clients. I just tell them that what you need to simply do, I'm an accountant, you're a layman. Prepare these records this way, the way you can understand, the simple way you can understand them, then I'll do them in the correct format. So you can do them your way with the knowledge of accounting, but the accountant or a professional will now prepare the reports according to the standards which are required. So you need accounting knowledge for you to run a business. Negotiate supplier terms. A good example is one. I'm in the construction industry. I've said you're Geotech, where we do a lot in the construction. Electrical construction, to be specific. Now, in the construction, firm, this is what happens. You are given a project, you start your project, after some point they do what we call valuation. Now, you must use money, you must budget and get things done fast for you to be valued, because you'll be paid according to what you've done at the site. Now, you cannot tell me that you get a project of 10 million today, then you start that project, you'll pump in money first for you to be valued. Let's say you start a construction today, you pump in money, maybe it requires about 2 million, 3 million for you to get valued, maybe a month also. Why will you get this money if you don't have the money? Negotiate with the supplier that we have so and so. Here is the project. Hii kazi ni yetu. So this is how we work. Supply me with these materials up to this level, a limit of 1.5 million or 1 million. Negotiate. One supplier sema give me up to 1 million. Tafuta supply mwingine pia sema 1.5 million. We tafuta milioni moja. Uongeze, you supply goods and you do project worth 3 million. When you'll be valued at 3 million. Whatever. I'm just giving a scenario. Of course, that's not the reality. But you're given a 3 million. You pay the suppliers, and then you continue. At the end of the day, you'll be deliver the project, but you didn't have the money, full money at the start. It's simply you have to bring other people on board. Invoice promptly. You are valued today, invoice tomorrow. Get the payment. You're able to finance other things of the project. Enforce payment terms. Enforce payment terms. Currently, even my consultancy, which I'm doing, I'm combining these two, the accounting, whatever. If I see that you are a bad, or you can borrow this, if you are a bad credit debtor, then I will not work with you on credit. You pay cash, I work for you. If you want me to file for VAT, I file today, pay, or pay me. Later pesa, I file for you. So that I'm able to run my operations in the office or anywhere else. Because why should I even invoice you today, but you already have 10 invoices you not paid, and you're reluctant to pay them? I'll have 1 million outside, but I close the office because I'm not able to pay. What you owe me will not be able to pay. That's why I think you've seen the stories of some people in this country, where somebody is closing a business because the government, county government, whatever, these government agencies have not paid. I've seen even with somebody who closed the office because he had some he was in the security field, eh? So he had guards in Kisumu. I will not tell you where, but he had guards in Kisumu. But a government, it was a government agency. The guy had to close the office literally because these people have not paid for the last 6 months, and he's paying his guards. He's paying his guard from his other sources. So wewe utalala njaa kwa nyumba kwa sababu unalipa wafanyikazi wako. It will not work. So when it is not possible, need cash. If it is not, leave it, look for where you can get cash. It will help you, one, to promptly pay your bills, meet your tax obligations, do other things, and stay afloat. Next slide, please. Almost a few minutes to come into, I think I have 2 or 3. Next slide. Growth and funding. Growth options. Increase price, increase volume, improve margins. Good example. I make sales today, and I sell what we call, let me deal with people in land, real estate. Now, in real estate, you'll see several people with flyers selling land. What they're trying to achieve there is to increase the volume. If I'm selling land at 1 million, I simply need to make several of these 1 million without increasing to 1.5, and I'll still achieve my profit. Because some market areas, if you make a mistake of increase a profit, increase the price, people will go. So what people should understand that you increase the price only when you are the market leader. One, you have value that your product is standing out. I've given an example of LG and these are the top brands. They've maintained high value, high pricing, but they're still selling because there are people attracted to that, whatever they have. But if you increase the price where people are all the same, you're not the market leader, you will be thrown out of the market. Improve the margins. Improve the margin is simply check on your costs. Check on your costs so that the gap between price or the selling price and cost is why. If you are able to, if you are buying these things at somewhere at 10 shillings and you know you can get them somewhere at 8 or 9 shillings, go so that you're able to add that 1 shillings to that. In terms of funding options, loans, equity, and grants. Let me speak about loans because loans and equity are very rare. Loans. You need loan to survive in a business. So long as you're able to manage your business well, you need loan. Loan is not bad. That is one of the things that we need to understand. Loans are not bad, but how you use the loan and understanding and budgeting that I need to repay this loan at this particular time. So loans are not bad. And you need to understand that there are some financial institutions who understands that the loans, they are not afraid of loans. They take the loan and they expand and they repay. They take loans and expand and they repay. And they don't have a problem. At the end of the day, you'll realize that you're able to do a lot of things because you have these other money. You cannot raise all this money because let's say that you have a project where you look at all your money, you want to sell all your assets to fund this business. No. If you're able to get a loan, negotiate for the repayment term. That's what you need to negotiate on, and negotiate on the interest if you're able to. That's why we have different options in terms of loan. We have banks, we have circles, we have other venues, we have soft loans from friends. Have a friend who can give you even 100,000 soft loan. At the end of the day, ukimrudishia, ushatengeneza 20 shillings on top of it, or 30. So, loans are not bad for you to grow. So long as you know that this business has capacity of growth. That's recently I was talking to a friend of mine. She's based in Kisumu. They have a business. So they were seeking advice from me. That this business is okay. We are able to make the sales and it's okay. The business is doing well. But we are not able to meet the demand. So we are feeling like we need to go and get a loan from the bank and give our cars as a guarantee, security. I asked them, okay, how much do you want? Then after a long conversation, I said, okay, but you can make this thing progressively. This money you're looking for, you can make it progressively. Only what you need to do is to adjust this and this and this, and let's look at this option. I provided those options. And they bought the idea. And so far they're okay. They're in their way to get whatever they're looking for. But if you don't understand that aspect, you could simply go for a loan, get your car security, then maybe you don't understand how the business can be affected. When they get affected and default, there's another thing altogether. Because your car is at risk, the business itself at risk, even yourself, you are also at risk because you have to look for money, always your business, always your car. Grants are there, but they are very rare and they're specific to nature, some nature of institutions or organizations. Equity is simply shares. So it depends, equity depends on the nature of business you are doing. Some business do not have equity. Many do not have equity because they don't have capacity. One, I've told you that one, you cannot start a business today and take your money and work for bonds. It will not work. Utafunga business. Let's take home. Just before I invite questions, one, a business needs financial mind. As much as you need the marketing and any other thing, you equally need financial mind for the business to grow. Secondly, you need to plan well prior to starting the business. Understand, budget, know what you need at what time. If it's necessary to look for financing, plan for that as well. Understand the nature of industry you're getting into. If you need licensing, special licensing apart from the normal license, need to plan for that. If you need to plan for taxes and any other thing, you need to know that from the word go at the point of registration of the business. Most of the time in the past, currently KRS has really regulated that. Some years back, people used to apply for pins, KRA pins, kwa cyber. I know others are still do that. You go to apply at cyber, alafu mtu wa cyber anakuwekea obligations zingine hata uelewi. You get your pin, but at the end of the day, you have your VAT. Other personal pins have VAT. Waliongezewa hata waelewi. At the end of the day, you'll be asked to pay something which you don't understand. When you register for business, when you register for PIN, KRA PIN today as a business, you know to understand that after 1 year or whatever period depends on how you've chosen your financial period, you need to file. When you don't have a business, you file nil. When you've done a business, you do your workings and pay the necessary taxes. But don't assume that the business is not working, I don't need to file. You will incur penalties every year or every month. But all this information you need when you seek knowledge of an accountant. So I think I'm done. Thank you. Moderator, you can pick it up.
Well, nice. Thank you so much, Mr. Eric, for the wonderful presentation. We can appreciate him, applaud him if you can hear us. Some of us joined on course when we already started. Welcome so much. And at this session, of course, we have to interact now. We want to receive concerns, comments, questions from our viewers or our audience. Yeah, so should you have a question, you can thumbs up, you can type via the chat box, then it shall be responded to accordingly. That is a conclusive explanation, especially for whoever is purposing to start up a business soon or whoever is having one, an SME, and is willing to really get to know better ways of getting the business performing. I have my take homes, of course, but again, even as we prepare we can start shooting our questions, should there be any, that is. I had a few. One, on pricing, there are people with after having considered all the factors to help determine the pricing, then within a moment, somebody is opening a business besides you, and he comes up with abnormal price, relatively lower than yours, and your price is after having considered all the required expenditures and margins, such that should you go below your pricing, definitely you might run a loss comparing your credits and debits. So my concern is, how do we live or how do we overcome a case where the neighborhood prices are lower than yours and you can't lower yours further? Probably these people might be pulling away customers from your business. So how do you handle that? Two, there are individuals with mobile businesses. For instance, the cucumber sellers. Today they're in market A, tomorrow market B, depending on the market days. Yes, I understand these businesses have compliance and regulations that are supposed to be adhered to. So how does the mobile businesses handle compliance, especially the ones doing trans-county? Tomorrow they're in county A, the next day county B. How do they survive with the compliance across the counties? Or do they do the double taxing or taxes? I think we can address that. Then lastly, majority of the small businesses always tend at increasing the margin, and that involves evading part or whole of the regulations. I witnessed a case where somebody has a business and then he knows that the first thing he needs is a license. So this person gets the business license. But again, the same person is hesitant to pursue other regulations required. So the county officers would pay a visit and then like, okay, yes, you have the license, but where is the fire extinguisher? You have this, but where is the other? Yeah, so how do we is it advisable to pursue partially these regulations depending on the convenience of the business, or you have to get all of them before you pick up or as you're picking up? Thank you, Rick. Maybe we can address such as we wait for more.
Thank you. Quickly, let me try to respond. Let me start with the last one, where you are talking about partial compliance. In my talk, I think I spoke about understanding the nature of industry you're getting into before you get into it, so that you plan accordingly. In terms of compliance, is better, more so the licensing, is better to be fully compliant, or to see the possibility of having all the compliance in place as soon as possible, so that you avoid the inconveniences that comes with non-compliance. Look at this situation where I want to provide analogy with the car. If you have a car, the county government of Nairobi normally charges 300 for parking daily. Other counties charges different. Kiambu charges different, Kisumu different, other counties charges different. Now, you park your car. Then, you know where you are parking, you are not very sure. I know several people do this, but you are not sure whether the person you're living in the Vijanawa street for parking are true enough to guard your car. So you leave a car, you give him, I'll give you something. Of course, the car is 300 shillings, so you pay him less. Let's say 100 more. Then this guy simply lives there maybe for a minute or two. Then Kanju guys comes, then clamps your car. And nowadays, they will send you simply a penalty on your account. The penalty is 2,000. when a day comes, then you say that, okay, here I can't get a boy to any other street guy to help me. Let me pay this parking. Then all of a sudden you realize that, oh, your account has a penalty of 2,000, so you need to pay another 300 that day. So you need to pay 2,300 for you to park. Now, the inconvenience it is here. If you had paid the 300 the previous day or the previous time, this time you would have simply paid 300 and you go your way. But since you fail to do that, then you will simply pay the 2,300. Where will you get the money? Now, bring that analogy to the business. If you fail to comply, you get penalized. The penalty will be higher than what you would have paid to comply. So I would advise simply check the industry you're getting into, better to comply, then move on without disruptions so that you're able to plan your business well. Second questions was about the pricing. About some people, you talk about some people, the the neighbor is coming with a lower price than yours. Understand two things. Understand your market, understand your business. The market is what is the general control of the market, what the price is, the market, what are the products they offer. And in my business, what the best price if I do, I'll make a profit. And if I need a promotion, what will happen? Now, I want to give a good example about that so that you don't copy the neighbor. I've seen a clip, and I think it's applicable here, where some two people are selling yams. They started, all of them, there were two, all of them were selling this thing at 100 bob. So the other person saw that this 100 bob, let me reduce it to 90. The other person reduced to 90. Then the neighbor also reduced it to 90. The actual price for that yam should be 100 bob, but this guy reduced to 90, the other person reduced it to 90. Then they later came up, the other person decided to take it up to 30 bob. But since you are the neighbors, you say, let me also take it to 30 bob. Now, when you hit 30 bob, when that guy was at 30 bob, huyu mzee wa 30 bob mwenye aliingia kwanza akadecide to buy all your products at 30 bob. Amenunua hizo products zote at 30 bob and decides now to sell them at 150 because he's now the only person in the market. So the issue is, don't go according to neighbor, understand your business first, because if you go there, that way you're likely to run out the business because you don't know the nature of the business, where he's get the products, what kind of the profit is going to make. That was said, you do not underprice and you do not overprice. Simply make what you're able to make a profit out of. Give price what you're able to make a profit out of. The third question was what? Just remind me. Was a cross county, the inter-county, or beyond the borders, beyond one geographical area? It was the issue of one, we are in the same country, so in terms of the business laws, it cuts across everywhere, apart from moving beyond the border of Uganda or Tanzania. So that one, the other laws applies. But if you move from Nairobi to Kiambu County, the only thing that might change there is the business license, but other things remains constant. But you must understand that when you have a car, you live Nairobi, you go to Kiambu, you are going to pay parking. Even if you had paid the parking from Nairobi, you will go to pay parking in Kiambu for you to work there. So the same way, when you have a business in Nairobi, like in Naivas, like a good example is Naivas supermarket. There are branches across the nation. But if you check, I believe KRA pin, they have the same KRA pin all across, the same KRA pin. But for the business license, they will have for all the counties where they are operating with. They should have all for all the counties where they are, of course, where their branches are located. Because you cannot tell me that the license for Nairobi will be applicable in Kisumu. It will not be applicable. So some other things you have to see what can work for you at that particular place, because for you to be compliant, you must also adhere to those laws at that particular area. Thank you.
Yes, thank you so much. Lukio raised a hand. Lukio, welcome. Your question.
Thank you. I've lowered my hand because Eric has covered most of the stuff I wanted to highlight on. But just to add on his response on pricing, as a business, you have to first establish why is it that your competitors or the person who has come closer to you is selling cheaply. That is now the point that you have to go back and review your costing. Because maybe you will find that, I'll give you an example, both of you are selling chapatis. Your costs are high because you are buying your flour from Naivas, while this guy is Akona Mashimo. He gets his flour from maybe a wholesale somewhere. So you also need to look at your cost, and that is what Eric was referring to as the moment you understand your business, it's not that everything has to be done in cash, depending on the type of business you are running. When you get credit facilities, you are able to manage your stock. You are able to be competitive in terms of when you have quite a number of stock in place, you are able to sustain whatever you are supposed to supply. So you also need to understand your market. Where can you get your supplies from? Who can you deal with in terms of suppliers, and how are the costs? You have to at least weigh those options. Then in terms of pricing, these things goes hand in hand. The pricing and financing, and also the profitability of these startups. Eric clearly mentioned that one of the things that is ailing the startups is you find that it's the same business that you're also depending on. So at the end of the day, you take out like 500 from the business to do your grocery shopping at home. And this is what is also killing our businesses, because when it comes to pricing, what we normally tend to forget as startups is your cost as the person running the business. So you find that at the end of the day, what you've covered during pricing, especially for those offering professional services, you've covered for the overhead cost minus your own expenses. And that is when now you go back to your pocket, and either if you have to get money from somewhere to run the business, or you have to close down the shop. So these are things that we really need to consider when we are doing our pricing, because they'll inform our profitability and also the growth for the businesses. So I think that's what I can add. And thanks, Eric, for the insightful session. And we are looking forward for such. Thank you.
Very nice, very nice. Thank you so much, Lukio. Again, as the discussions were going on, probably something came into your mind as an additional comment. Would there be anybody? Maybe something you feel you should also add before I welcome the CEO?
Maybe just to reinforce a point that was talked about by by Eric when he was doing the presentation about I was in a noisy place. I wasn't able to get properly, but he mentioned a point like when you register a business, stuff like onboarding the VAT and everything together, immediately was giving some form of advice. I just wanted to reinforce that point by saying that I personally, in our company, we played victim on that. So it is a very, very, very serious point. I remember when we first registered our company, I tended to be very, 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 very aggressive and tried to onboard almost everything together. And you see now, as at that time, I didn't know that you were supposed to be filing the returns every month. So it took very many months, and they were rolling over the 10,000 every month. So I realized when it has really accumulated to, I think, 100,000 plus. So I remember when we realized this, it was the same time that we got a very good business deal, a very, very, very good one, very good one. So that time they wanted us to submit tax compliance, just to realize that we could not get the tax compliance minus paying that lump sum to the taxman. So your gate is as good as mine. It was not a very good time for us. Something that we didn't know. Imagine now you need to pay over 100,000. Something that we could have easily filed every month, and it could have easily avoided the unnecessary penalty. So I think that was a good point. It touched me because I could easily identify with it, because I remember when we were just starting off, we really played victim on that. So thank you very much, Eric, for highlighting on that as well. Back to you, moderator.
Well, thank you so much. There's a pop-up text from Joshua. On the point of not onboarding the full compliance, how can you service compliant industries or customers who want you to show documents of compliance, yet you don't have all? That's Joshua. I guess that is a additional comment to reinforce the answers previously given. Yes, one basic thing that is on the ground is business and tax are twins. One doesn't go without the other. So if anybody thinks of doing business, then tax become the priority expenditure, and of course, plus any other. I think somehow it is even more serious than rent of the premise. Yeah,
Sorry,
because
I think mine is more of a question.
okay.
Yeah, I think I didn't put a question mark. Well, because I am in that space where I sell to compliant customers or compliant, B2B thing. So in that regards, they would want you to have these documents, and sometimes it's a bit costly onboarding all of them. And if you were to do them in piecemeal, as was suggested, do you think that is going to hamper your ability to uptake orders when you should have them?
Okay, let me respond. Thank you for that. I saw it as a question. You're right. Get to understand that my advice came at the point of registration, where you register the business. You don't know where your customers will come from. You don't know what nature of market is likely to meet you in your business. But from what you are speaking, you already have specific clients. You know, this client is in this industry. This client is like this. This client is this. So in this case, you'll need to comply because you need to sell. Now, let me speak briefly from the point of tax consultancy. we need different obligations. One of the most important obligations is called payee. When you have an employee, you need to have pay as you earn, pay employer, so that employer, you normally deduct your pay from the employees and make submissions on their behalf. Now, what you need to understand that initially pay used to be well. Obligation, it used to be very okay. You could use a business pay, put pay today and comply. Nowadays is a challenge because they introduced two things. If you're in a business, you'll understand. They introduced as a package of employee, they introduced NITA as a mandatory payment, and they introduced housing levy, where an employer matches the employee reductions. So those additional costs which are coming in, which before you receive a pay, you need to understand that this pay, before I get into it, these are the additional expenses which I need to incur. Now, the same with NSSF. NSF initially used to be 200. Employee deducted 200, employer matched the 200. Nowadays, it's no longer 200. It is 6%, 6%. So, if you have more employees, you need to know whether I need to register this NSF today. If I register today, will I have enough cash flow to match this other contribution for the employer? So, the same way, what we are talking about, if you need to make full compliance, you can do it in bits, not once. The same way I'm saying the issue of VAT. People had VAT not because several people have been misunderstood that I had VAT because I make sales of 5 million and the stuff. No. Several parameters determines when you are supposed to add VAT. If your clients are vertible clients, you need to add VAT from the word go for you to make sales. If your sales are even 100,000, but you are managing or management or consultancy business, you're supposed to, like lawyers, accountants, you need to add VAT, even if you're making 50,000. Now, on the issue of compliance, yes, you can be compliant, but I advise this: what you can do, be fully compliant is okay. But I'm saying, from the point of knowledge of business, how they work, I normally advise that you can do it. You can do it as the need rises, not once, because if you're not planning, if you not budget for that, it might shake you. But in this case, it is okay. Thank you.
All right, thank you so much for the clear explanation. Could there be anybody I'm looking out? Yes, I think the floor is much satisfied. And yeah, so at this juncture, thank you so much, our speaker of the day, for such a elaborate moment of sharing with us. Back to you, CEO.
Thank you, Mr. David, and yes, and also to Mr. Eric. Thank you so very much for that well researched, and yeah, you have spoken like a man indeed from the field. Yeah, to prove that not only are we theoretical, but more beyond all that we're doing, we are striving to provide practical knowledge that will shape our minds and equip us better. Yes, I'm so delighted to see all of you who have managed to join. Yes, I can see new faces. Mr. Joshua Soka, I'm so happy to see you on board. Yes, Mr. Lukio, Mercy, William of Wiltech Limited, Marinista, Eva, Eric, the two Erics, the dual and the Okoth, David Oziambo and David Ogon. Thank you so very much for joining. I want to briefly give a summary of what Telespark Digital is all about, and then we'll just close this.
Yes, for those who might be asking, what is Telespark all about and why are we even doing what we are doing? We started out on this journey in the month of October to run these webinars on Fridays from 8 to 9:30 to equip startups, SMEs, business people, and anyone out there who is perfecting their craft and striving to impact the society in one way or the other. And of course, also trying to earn a living out of it. So we are setting up these sessions to equip us, and we have them every Friday of every Fridays weekly. The other thing that we are trying to set up is it's a business school. We are in the process of putting up courses that are as practical as this session has been, so that we can provide specialized services in terms of coursework and training to our students and any person who wants to advance their knowledge in any area of their business operations. And so we are putting up courses still in the works, and we hope to roll them out soon. Those who are in the group, you saw we ran a poll today, early in the day, and we are trying to understand what format of learning would work for us. And if you haven't taken that poll, please stop by and help us take that poll so that we can know how to prepare better for you guys. And for those who aren't in the group, like my friend Osoka, I'll be glad to add you to the group if you don't mind, so that we can co work on this. I believe if I bring my little knowledge and you also bring yours, we can scale greater heights. So that is it. We want to end this at this point, and thanks so very much for joining. And I hope to see us all in the next webinar that is coming up on Friday of next week. Yes, thank you, and have a good night.
Amen. As we are exiting, people are commenting, following our platforms, Telespark Digital on all medias. Can follow.